On today's episode, we are going to take a look at AMD. They just reported earnings and they're up about 10%. This is the complete opposite what we saw last week with Intel. So on today's episode, it's going to be broken down in the following. First, we're going to take a look at just some of the main points that happened during their earnings. After that, we're going to take a closer look at their earnings. We're going to take a look at their earnings report and their earnings presentations. And finally, I'm just going to end with my thoughts with what I'm going to do with AMD. So let's get started. And before we go any further, guys, if you are new to my channel, if you are a long-term investor, and if you want to learn about growth stocks, make sure to hit that subscribe button. Also, if you guys want to get in contact with me, the YouTube comments is the best place. I'm very active there, but I'm also very active on Twitter, and I do have a Discord channel which is free to anybody that wants to join. Even I'm very active. But remember, at the end of the day, all of this is free. I am not a professional, so none of this should be taken as advice. Finally, check out my website, josenajaro.com. I have a weekly newsletter, and I am sending out a lot of information, so check that out. All right, so like I mentioned, AMD right now is up 10% after hours, sitting at $74. In the past, let's take a look at their price performance in the past, in year to date, not counting this big uptick. Not counting this big uptick, it's already up 37%. I do believe after today's date, it will be closer to a 45% up, and that's amazing, especially when we just saw Intel, one of their biggest competitors, have a really rough quarter when they're down almost 10%. And Intel, I think year to date, it is down about 18% compared to AMD, up over 45% on the year to date. So that's pretty amazing. So congratulations to all the AMD bulls. You guys deserve it. Also, make sure to hit the thumbs up on this video and let me know in the comments, guys. Are you an AMD bull, or are you an AMD bear, or are you just here just to see what happened to the earnings? All right, so now let's take a look at what happened this earnings. Some major points. First, quarter two non-GAAP earnings per share were 18 cents, which beat expectations by a penny. GAAP earnings per share were 13 cents, which also beat expectations by a penny. Revenue were $1.9 billion, and this is up 26% year over year, and it did beat by 70 million. And finally, quarter two non-GAAP gross margins were 44%. Their guidance were 44%, so they did meet their guidance. They did not meet the expectation number of gross margins being closer to 44.4%. So they were down by about 40 basis points. All right, so you might be like, Jose, this is crazy, right? This is a company that they barely beat earnings per share. They only beat earnings per share by a penny. Yes, revenue was up 26%, but they didn't even beat their guidance in gross margins. Why does this deserve to go up dramatically when Intel, who also had strong growth in revenue and also had strong growth in earnings per share, why do they deserve to go down a bit, and why do AMD decide to rise? So I did do a video on Intel where I mentioned the major key points of Intel, and just how I feel like investors in the Intel investors are kind of more angry than anything at the overall leadership that's going on to there, mainly with that delay of the 7 nanometers. And then that's not the first time they saw that, right? They also are seeing the delay within the 10 nanometer. So if they're continuing to seeing the same problems, it's just gonna make the investors and all the investors of Intel angry. Where on the other hand, AMD, and let me say this, I am both a bull of Intel and AMD. I do believe there is a market for both of them. So it's not like I'm trying to knock one hustle for the other one. No, that's not what I'm trying to do here. Like I said, I do believe there's plenty of market here. And anybody coming in, I hope one thing I do is to always come into these videos with an open mind. And like I said, I feel like there's so many AMD bulls that believe that the only way for AMD to become the greatest is if they destroy Intel. And I don't think that's necessarily true. I do think there's plenty of market in this. Yes, we could take, yes, AMD could take market share from Intel, but I do believe both of them can continue to grow. And especially that they're also in different markets away from each other. They do share similar markets, mainly in the CPU business and in the server, in the data center servers, but they are also in different markets as well. And I believe that's where both of them can continue to be winners. So even though I am gonna be in this video, I am gonna be hyping up AMD, this does not mean I am trying to trash Intel, because I do believe there is plenty of room in this game for multiple companies. And I do believe the great thing about competition, it pushes the companies to do better. When there was no AMD, I feel like Intel might have gotten a bit stale and be like, hey, there's nobody around to really take out anything, so maybe we can go on a coastal period. AMD came out of nowhere and started throwing punches left and right. Again, this doesn't mean Intel can pretty much do the same. Yes, they were in a pretty stale period for some time, but that doesn't mean they can't come back up from it. And that's pretty much what I want to say. So let's take a look at what happened during their earnings. So, and what were the major reasons? So the major reasons that their earnings, and they're up after hours, is they saw a huge gain in revenue from their semi-custom segment. And we're going to take later on through this episode, when we look at this company's revenue breakdown, they pretty much have two segments of revenue. The first is CPUs and GPUs. They have all of that in one segment. The second segment that they have is the semi-custom and the enterprise business, where they have all the servers in there. So that's their second segment of revenue. For quarter two, their beats were driven by the enterprise, by the embedded, and by the semi-custom strength. And that's pretty much the servers, and that's pretty much the overall production of the new systems, of the new gaming system. And I also took a listen at their earnings call, and they did mention that yes, even though this earnings call, they already had some sales from the new PS5 and from the new Xbox X series. I forget which one is that. The next quarter 3 that's coming up, is gonna have the bulk of it. So we're gonna see a bigger increase in revenue there, and I think that was pretty impressive. They mentioned computing and graphics sales were about $1.37 billion, which is exactly what analysts were expecting. And this is up 45% year over year and down 5% quarter to quarter. It was mainly due to a strong Ryzen processor sale and weak GPU sales, respectively. One thing I do want to mention is you got to understand what type of sector you're looking at. There's certain sectors that you like to see quarter to quarter growth more than year to year growth. Obviously, in any sector, in any company, you always want to see year to year growth. But there's different sectors that you want to see more of a quarter to quarter growth. And in the semiconductor industry is very cyclical. And what I mean very cyclical is certain quarters are known to do a lot better than others. Those quarters tend to be, for example, quarter 4, quarter 3. The weakest is always tend to be quarter 1 and quarter 2. And the main reason is there's no real major holidays happening in quarter 1. There's no real major holidays happening in quarter 2. Opposed to quarter 3, everybody's packing up for Black Friday. Everybody's getting inventory ready for those big holidays where they make big sales, especially in the computing and in the technology sector. Opposed to, for example, a company like Spotify or Netflix, where you always want to see a quarter growth, because it doesn't really matter what time of period it is. You want to continue to get more users during that time. So that's one thing I do want to mention when looking at companies. You got to understand how their revenue moves and how they differ from other companies. Next, we want to take a look at their second segment, which is the enterprise, embedded, and semi-custom. This fell 4% year over year, but was up 62% quarter over quarter. It was up to $565 million, and the expectation was $480 million. The semi-custom sales were lower on the year, but higher sequentially, majorly done by the EPYC sales were strong in both periods. So what does this tell you? This tells you that, hey, EPYC sales, which is their data centers, are doing pretty good. And what else does this tell me? This tells me that, hey, if they're doing this good right now, imagine next quarter when they're gonna have those video game systems coming in, which is also included part of this revenue. That's gonna help increase this revenue, and if they keep continuing to increase the EPYC sales as well, it's just gonna. I do believe enterprise, embedded, and semi-custom is the true revenue that's going to be the one that's going to continue to grow for AMD throughout the years. They also mentioned that their revenue doubled. Let me say that again. Doubled in notebook sales and in server processor sales. That alone, to have anything double, especially something like that, it is amazing. And it kind of gives me an overlook at the rest of the market. So who are these major who are the people buying the server processors? These are the holders of the cloud market. These are the cloud market servers. So what does it tell me? It tells me that the cloud market is needing more demand, is needing more processing speed. Why would the cloud market need more processing speed? Because their customers are using more bandwidth, and they're trying to keep up with demand, with all the demand they're getting. So it kind of trickles down. And who are the customers of these cloudy markets? And that would be, for example, all these SaaS companies, all these software as a service companies. So it tells me that the software as a service companies are seeing great results, are going to see great results this quarter, because we're seeing that the total clouding market department is seeing a huge increase. And the reason I could tell that is because we're seeing a huge increase in demand in the server sales. So if once you understand the market, you can kind of trickle down its way down to the customers and what other types of markets are going to be seeing similar gains. The only question that one should really have is how much of this is already priced in. Next, they also gave guidance for quarter three. For quarter three, AMD expects revenue of $2.45 billion to $2.65 billion. That's up 42% year over year and 32% quarter over quarter, with gross margins of 44%, pretty much the same amount of gross margins that they had now. And the company's main reason for this increase in quarter three is they expect strong Ryzen, they expect strong EPYC processor, which is the clouding servers sales, and they also expect a huge increase in the semi-custom revenue to benefit from the next generation game console. Like I mentioned, they did mention in their Lisa, I'm pretty sure it was Lisa Su who mentioned this in the earnings call today, that yes, right now they did take a nice portion of revenue from the next generation game consoles, but quarter three is when they're going to see the nice boatload of that money coming in. For the year, AMD expects sales growth of 32% year over year. That's up from estimations. Previously, they estimated somewhere of a 20 to 30% year to year growth. Now they're expecting a 32% year to year growth. So they even upgraded their guidance, which again is another bullish sentiment to investors. They also increased their gross margins to 45%, which is only 100 basis points higher than they are now. And this is kind of telling me something. This is telling me that right now we're kind of at the levels where gross margins are pretty much going to be within this. Normally, when you are in a growth company, and I would have considered AMD a growth company, profit margins continue to improve quarter over quarter. Once you start seeing a flat line with them, it means that they've kind of hit, I wouldn't say they've hit a level of peak in the market, but more they've kind of understand how to process their market. They've learned more about their whole process to make sure their gross margins are a tip-top shape. And they're saying most of this revenue growth for the year is going to be driven by PC gaming, by gaming, and the data center products. All right, and before we take a look at their earnings presentation, I wanted to take a look at what their future looks like. So here, I'm here taking a look at some analysts, and they kind of give an estimation of what their revenue growth is going to be and what their earnings growth is going to be for the next 3 to 5 years, and what do we expect to see. So first, let's take a look at revenue growth. So AMD's revenue growth for on average yearly for the next 3 to 5 years is expected to grow 17.6%, when the industry is only expected to grow 9.5% and the market is only expected to grow 9.2%. So the first thing I'm seeing is AMD for the next 3 to 5 years is expected to beat the market in revenue growth. And what do I mean by 17.6% annual revenue growth? It doesn't mean that every year is going to see 17.6%. Maybe one year might see like 70%. Maybe another year might see like 2%. But on average, for the next 3 to 5 years, annually is going to grow about 17.6%. Similar with annual earnings growth. Annual earnings growth for AMD is expected to be 37.1% annually for the next 3 to 5 years, when the industry is only expected to be 24.3, and when the market is expected to grow 22.7. So AMD is expected to both beat the market and the industry in earnings growth and revenue growth. So this we can see is 100%. I would personally consider this a growth company, and to see this it is pretty strong to those that consider AMD a growth company as well. And next I want to take a look at their past growth, and here I'm in lazyfa.com. On 2019, for the full year of 2019, AMD grew only 4%. In 2018, they grew 23.2%, and in 2017, they grew 26.63% year over year. So now AMD is estimating that this year they're expected to grow, what did they mention? Close to 32% year over year. We can see that is better than any of the other years it has done. And let's just take a quick look at their margins real quick. AMD's these are GAAP gross margins, were 42.6% on 2019. I know I mentioned their non-GAAP margins were 44.4%, and we'll probably take a look at that later on. But here you can see what I was mentioning. As a growth company, in theory, you see gross margins increase over time, and this is exactly what was happening. Eventually, once you've gone to your peak, you start flatlining. Again, that doesn't mean you start flatlining in revenue growth. As we can see, revenue is expected to grow dramatically, but it just shows that AMD is now at a place where they don't have to really focus much on their production line, because it seems like they've mastered it. Now they can focus on other things. And another thing, we can see profit margins. Profit margins for AMD continue to increase. And to me, I do invest mainly in growth companies, and this is a perfect example of how growth companies work, right? They start off usually making very low profit margins at the beginning, and as the years progress, they start to improve and improve, very similar to gross margins. Eventually, they start making money, and you start getting great returns with it. That's in theory what growth investors are looking for. All right, so now let's take a look at their earnings presentation, and let's see what they had in store for us. So most of the time, I take a look at both the earnings presentations, and we're also going to take a look at the press sheet that they reported. But I do believe mostly all the information can be found in this presentation. All right, so now first I want to explain pretty much some of the main differences between Intel and AMD and some of the other semiconductors, right? Because like I mentioned, I feel like most of the time I hear so many people say like, hey, for AMD to succeed and for Intel to succeed, one of them needs to go down. And the truth is, for my opinion, I don't believe that's true. They are all hitting different markets. And like I mentioned in my previous Intel video, I talked about some of the markets that Intel is in that AMD is not. And here I'm going to do the same. I'm going to talk about some of the markets AMD is in that some of the other semiconductors are not in. So first, let's take a look at the ones they're in. So here I'm going to take a look at AMD, NVIDIA, and Intel, which are the three top semiconductors are in two similar markets. The first one is PC and gaming solution. So they're all in the PC and gaming solution. In that market, AMD is battling both Intel and NVIDIA with GPUs and CPUs. Then we have in the data center. The data center, again, very similar. AMD is battling both Intel in the CPUs data center servers, and AMD is also battling NVIDIA in the GPUs for the data centers. Unfortunately, this is not in the presentation, but Lisa Su mentioned that there was a huge increase in CPU data center sales, but she actually mentioned that there was a decrease in GPUs data center sales. So we can see they might be taking some market right now from Intel in that server data center, in the CPU in the data center, but it doesn't seem like they're doing that well in the GPUs. And I do believe NVIDIA might have a little more stronghold there than Intel does in the CPU server. And I just wanted to mention, because that's not mentioned here, but if you guys want to take a look at their earnings transcript, that's going to be one of the questions they asked there, and I was listening to it before doing this video. But where does AMD differ from all of them? And let me see where Intel and NVIDIA kind of differ from all of them. And again, this is not a video about them, so I'm just going to mention some of the major points. So Intel, NVIDIA's major difference between all of them is the huge lead that they're trying to take in the artificial intelligence region. And NVIDIA, for example, they just acquired a company last quarter called Mellanox to overall improve their artificial intelligence market. Intel, on the other hand, they have their Internet of Things and they also have their mobile eye, both which I do believe are a little bit ahead of the market, and so, but it's something that puts them in a different level compared to everybody else. Then we take a look at AMD. AMD, what I do believe right now, their major thing is they're trying to focus a lot on high power computing. They're also trying to do this packaging and interconnect technology, which pretty much they want to have everything all in one system. So where we have right CPUs and GPUs, they want to have a system where they have pretty much everything in there. So like I said, all of them, I do believe all three of these semiconductors can continue to do well. And I also believe, and that's why I'm not bearish in any of them, because I do believe they all will continue to grow. And that's pretty much what I wanted to talk about here. Next, let's take a look at some of their major highlights. And here, like I mentioned, we already took a look at their number growth in revenues. I just want to take a look at some strategic news or some highlights. First, they're seeing a huge improvements in commercial notebooks from all different types of leaders. They're seeing about 50 plus Ryzen 4000 notebooks in markets, and they're launching another 30 plus ultra thin premium and gaming commercials in the OEM notebook design. They also mentioned HP and Lenovo to ramp up their first commercial notebooks powered by Ryzen 4000. Apple Professional and Dell Gaming Notebooks also launch with AMD's GPUs, and they are on track to launch Zen 3 CPUs, RDNA 2 GPUs, and CDNA data center GPU architectures in the late 2020. So this is one thing I like about AMD. And again, I do see this with all the other ones, but AMD's roadmap is very easy to follow. They have one very straightforward that if you just Google AMD's roadmap, it shows how through the next years, they already have a roadmap that they are continuing to develop processors, to continue to develop their CPUs and everything else. Next, I wanted to talk about their enterprise and embedded system. And here, I'm not going to go really much in detail. I just want to show you guys some of the big names that are dealing with their big servers. We have big companies like Microsoft using Epic. We have companies like Tencent, the big boy, Google, AWS, Dell, HPE, and Lenovo. And they are on track to begin their Zen 3, which is going to be Milan on the data center CPUs in late 2020. So we can see we got some big boys here talking to AMD, and when big boys talk, big money comes in as well. All right, so next what I wanted to take a look is pretty much the revenue breakdown, so you guys know how the revenue is coming from. So like I mentioned, they have two segments, their computing and graphics, and here in computing and graphics, we see their CPUs and GPUs mainly. This makes up $1.3 billion, close to $1.4 billion of the company's total revenue. Remember, this company made close to $1.9 billion, so close to a little bit over 70% comes from computing and graphics. The other $600 million or so comes from enterprise, embedded, and semi-customs. And what comes in this revenue segment is pretty much the data center revenue, and pretty much comes with the new console gaming. So right now we see that a huge portion comes from computing and graphics. But what is really driving me to think that AMD is going to continue to grow is as they continue to grow their enterprise, as we're going to get the new consoles this upcoming year, this enterprise and embedded semi-custom is going to grow to levels that are going to be, we're going to see that closer gap, and that revenue breakdown is going to be a little bit better than how it's looking now. And that's something that I'm very bullish for. But again, on the same type of things is they're semi-custom, mainly with their gaming. That's more of a segment thing. It's usually a big push up front when most of the new systems come out. But as the years continue to progress, that usually tends to go lower and lower and lower until a new gaming system comes out. All right, so next what I want to take a look is at this company's balance sheet. Right now for quarter two, they ended with about $1.8 billion in quick cash. And this is up about 400 million compared to a quarter ago, and it's up by about 650 million year over year. And I have done videos on AMD almost on every earnings. And for me, I've actually been following AMD since they were about $7. I think even lower than that. And it's crazy to see a company that originally had crazy of leverage. Their leverage of cash compared to debt was I think almost a 4 to 1. Now it's the opposite. Now they have more cash than total debt. Their total debt right now is sitting at about $700 million, and that's up about $200 million. So that one actually caught my attention. Why did they increase their debt by about $200 million? Actually, no, it was back in this presentation. At the end of this presentation, the most boring parts, right, with all these charts that nobody looks at, we got to understand what's happening here. So the first thing we noticed is they borrowed they kind of had a secured credit line that they took out about $200 million. At the moment, I don't recall to see why they took out that $200 million, but I don't think that's a bad thing. It could have been just due to COVID expenses. They wanted to have a certain amount of cash ready just in case things come out. I do have to check this out, and probably later on I might do an update. But $200 million increase compared to their huge cash increase, it's not really anything that's giving me any form of bearish sentiment in there. Next, I wanted to take a look at their total debt, see how long some of their debt is due. So like I mentioned, AMD right now has close to $700 million in total debt. Out of that 700 million, 200 comes from that credit line. So after that, they have close to $500 million in what we call convertible senior notes. So they have senior notes, which is about $300 million due on 2022 with a 7.5% interest rate. So $300 million due in 2 years from now, that's such a long time. That to me, not worrisome. The only thing is 7.5% is a little bit high. I would have obviously wished for them to pay that off because, like I said, 7.5% is definitely high. Next is their next debt, and their final debt is $250 million due on 2026. 6 years from now, and that's a 2.12% interest rate. It's cheaper than my mortgage. So that to me is not worrisome. That's pretty much kind of free cash at the moment. So their total debt does not look that bad. The borrowings they took out wasn't as bad either. So to me, everything is looking good. So now let me do my thoughts on AMD. So AMD, for me, it is one I am holding a position in already, and I've been along AMD for such a long time. As a long-time holder, I am not planning on selling. But let's say I did not have a position on AMD. How would I play this? Would I buy AMD? Would I sell AMD? Wait, I already mentioned I wouldn't sell AMD. But if I wanted to get into AMD, this is how I would play it. And this is how I pretty much play all my companies. If I see they're growing at great levels, if I see there is strong strength, and we do see that, right? We see AMD is growing at very strong levels. We're seeing this year to year is going to expect it to grow 33%. We took a look at analyst growth that they are expected to beat both the market and the industry for the next 3 to 5 years on average. Next, I want to make sure if the company has a strong balance sheet. Check. AMD does have a very well balance sheet, especially for one that's considered a growth stock. Next, I want to see, are they in markets I believe in? Personally, for me, they are. I am very bullish in the e-gaming. I'm very bullish in the cloud market, and AMD is one that touches both of them. So it kind of hits all my marks. And me, if you guys have not taken a look at my portfolio, I have about 47 positions. So that helps me out when buying companies a lot, because with 47 positions, you might be like, Jose, your portfolio might suck right now with 47% positions. How are you getting any returns? To me, my portfolio is pretty much destroying the market right now, and I'm very happy for it. And it's just because I understand the type of investor that I am. I believe that even a small position can still be a big winner for you. So if the way I play it, if I did not have a position in AMD, I would continue. I would buy. I personally would buy AMD. And like I said, none of my with 47 positions, none of them really have a huge percentage of my portfolio. Only very few have more than 5%. Most of them are below 1%, are below 5%. And how does that help me? I put money on market on a weekly basis. So for me, AMD would be one that I would dollar cost average. Maybe some weeks I might open up high. Maybe some weeks I might open up a position low. So at the end of the day, it helps me to continue to grow into this market. At the end of the day, right, this is not advice. This is just how I would play it if I didn't have AMD in my portfolio. And honestly, if you guys have seen any of my other videos, this is how I pretty much buy any of my other stocks. I take a look at all my criterias. If it is, I buy slowly and surely, I average up. Sometimes I might average up, sometimes I might average down, but as long as I did my due diligence, it would allow me to be very confident in my position. But I hope you guys enjoyed today's episode. AMD was a beast, almost up 10%. Congratulations to all you longs. It is pretty good. I honestly wish I had my whole portfolio in AMD right now, but it's okay, right? That's not the type of investor that I am. So take care, guys. Have a good night. See you next time. And actually, let's take a look at what we have tomorrow. Tomorrow we have some great earnings. I think Spotify is gonna go up, and if you guys want to see a Spotify video, make sure to let me know in the comments below.